Have you ever looked at the crypto market and just thought, what is going on here? On one hand, it feels totally chaotic, right? Prices are all over the place. But then, you've got Wall Street, the big money, quietly placing massive bets on its future. So, what do they see that the rest of us might be missing? That's the great disconnect we're going to get into.
So yeah, that's really the big question, isn't it? Why is there this massive split? For most people, crypto looks like pure volatility, pure risk. But for the big financial institutions, they're seeing something totally different. They see regulations taking shape and a massive opportunity. The answer, it turns out, is in the gap between what the daily price charts are showing you and the huge structural changes happening behind the scenes.
Okay, to really get why Wall Street is so interested, you just have to zoom out. Way out. I mean, look at these numbers. Over the last 10 years, yeah, the S&P 500, gold, they've done pretty well. Solid returns. But Bitcoin? It's not even in the same league. We're talking over 11,000%. A return like that is something that institutions literally cannot afford to ignore, even with all the crazy price swings. It's exactly why they're so willing to jump into the chaos.
So, what's been the big holdup? Why haven't they gone all in already? Well, in a word, uncertainty. But that is starting to change, big time. And the key, you might be surprised to hear, is being forged right in Washington, D.C., with a new piece of legislation that could really unlock this whole thing. And this isn't some minor thing. We're talking a serious, high-level push. You've got well-known tech entrepreneur David Sachs meeting with about a dozen U.S. senators, and they're all pushing for something called the Clarity Act. The goal here is simple, but it's also incredibly profound: to create a formal, predictable rulebook for the crypto market. See, this isn't about banning it. It's about building the official highways to get into it.
Right now, this bill is getting close to a really critical stage. It's called a markup. And I know, that sounds like some boring political term, but trust me, this is where the action is. Think of it like a workshop. It's where the lawmakers get together, they debate, they argue, they make changes, and they basically shape this rough idea into something that actually looks like a real law.
So, what happens next? Well, here's the path. After this markup phase, the bill goes for a full vote. If it passes that, it goes to the president to be signed into law. It's this clear, step-by-step process that has the big institutions feeling so confident that, yeah, a stable set of rules is finally on its way.
But, and this is so important, the smart money, the big players, they aren't just sitting around waiting for this law to get signed. Nope. They are already making moves. They're operating as if it's already a done deal.
This quote from a top exec at Coinbase just hits the nail on the head. He talks about the delta, and what he means is this huge gap, this disconnect between the sentiment of regular retail investors, which, it's often pretty negative, and the actual momentum building up with institutions and regulators behind the scenes. It's like two different worlds.
So what you have are two completely different mindsets, almost two different games being played. You've got the retail world, which is often glued to the daily price. That leads to things like panic selling when the market dips. But the institutions, they're playing the long game. They're focused on the regulatory big picture. In fact, their buying activity often acts as a kind of support buffer, a safety net that stops the price from totally crashing when retail investors get scared.
And this isn't just talk. We have real concrete examples. Take Grayscale, for instance. They just rolled out a new feature for their big Ethereum ETF that actually pays out staking rewards to its shareholders. You can basically think of it like getting a dividend, but for crypto. Now, this is a pretty sophisticated financial product, right? They would absolutely not be launching something like this unless they were super confident about where the regulations are headed. And we're not talking about pocket change either. In a single quarter, that ETF paid out $9.4 million in these rewards to investors. That just goes to show you real, serious money is already moving through these brand new, institution-grade pipes.
And it seems like this confidence is spreading everywhere. Insiders are saying that pretty much every major bank has a blockchain strategy in the works. Get this, not a single institution that started looking into crypto last year has backed out. Actually, all this regulatory movement has just made them move faster. And maybe the biggest sign of all, the idea that Bitcoin could go to zero, well, that's just not a serious conversation anymore among the senior partners.
Okay, so we've talked about the regulations, but what's the deeper reason for all this belief? What's the fundamental why? Well, it really comes down to the technology itself, and this epic clash between the old guard of finance and a totally new way of thinking about value.
This right here, this is the whole shebang. It's the core innovation. Think about it. Before Bitcoin, any digital file, a picture, a document, whatever, you could copy it 1 million times. Perfect copies.
This was called the double spend problem, and it's why true digital money was impossible. Bitcoin's genius was that it created a digital thing that you cannot just copy and paste. It can't be counterfeited. For the very first time in history, we have true digital scarcity. And that concept, that's what institutions are looking at and thinking, wow, this changes everything.
And you know, this whole clash of old versus new is perfectly captured in this one kind of crazy story. Back in 2020, crypto founder Justin Sun pays $4.5 million just to have lunch with the legend, Warren Buffett. So Sun makes his big pitch. Warren, you should invest in Tesla and Bitcoin. And what does Buffett say back? Be careful with the one you marry. I mean, it's pretty funny, but it's also such a perfect snapshot of the difference between a tech visionary looking way down the road and a traditional value investor who's focused on right now.
And here's where Justin's Sun was coming from. His argument was that in the capital markets, we always give a premium, a higher value, to companies and technologies that are truly new, something that has never existed on Earth before. He doesn't just see Bitcoin as money, he sees it as a brand new kind of technology, and he thinks its value should reflect that.
All right, so let's pull all these threads together now. We've got the politics, the big money, the technology. What does it all mean?
So, when you boil it all down, here are the key takeaways. First, there's a major regulatory bill, the Clarity Act, and it's picking up steam. Second, the big institutions aren't waiting. They're already investing billions, acting like the rules are a sure thing. Third, all this confidence comes from a deep belief in the core technology, the fact that this stuff can't be copied. And finally, what this all signals is a huge shift, a move away from a market driven by retail hype and towards a real, institutionally backed asset class.
And all of this leaves us with one last really big question. For so long, we've all heard crypto called the Wild West, right? But now you've got the sheriffs in Washington writing the rule book, and the big banks are moving in to build the towns. So are we finally seeing the end of that Wild West era? And if so, what comes next? Well, that is the multi-trillion-dollar question, isn't it?